Hi, let's revisit Algorand, ticker symbol Algo ALGO, currently at $1.83 with a market rank of 19 and a market cap of a bit over 11 billion. Now on this channel, we don't discuss fundamentals much. We are mainly focusing on technical analysis, on the charts, on relative performance. And so we will not just look at the US dollar valuation of Algorand, we will also look at the valuation relative to Bitcoin, relative to Ethereum, and also relative to other competing blockchains, competing smart contract blockchains, such as Cardano, Solana, and Cosmos Atom. Now the US dollar chart of Algorand doesn't look too bad, right? Of course, we had an initial sell-off after the IPO, but since then we tend to be in an upwards trend. And especially with this recent price increase since the 20th of July, where a lot of altcoins went up, since that price increase we have seen more than 100% gains. Now that doesn't look too bad on the face of it, right? But once we divide this US dollar valuation with the Bitcoin price, we get the following chart. So again, obviously the initial sell-off, but now we see that Algorand is pretty much moving in tandem with Bitcoin in a pretty stable trading range. It seems like it's almost predictable where the price is headed. This trading range is not too small either. We are currently in the middle of it, but there's a potential risk of a drop of another 40%, or if it goes really bad, 66% versus Bitcoin. On the other hand, what's the potential? We are looking at an outperformance of 60%, or if things go really well, 87%. Now, I always like to look at trading volume because it's kind of an indication for the attention that's currently on a token. And usually when trading volume is very high, we also see the price being very high. So maybe there's a news that comes out for a specific asset. And so the news attracts short-term speculation. The price gets pushed up, and then afterwards, when there's not a lot of news, trading volume tends to decline, and with it, the price as well. And so we had just such a spike recently, here at the beginning of September, and so in just a few days, Algorand went up by 100% versus Bitcoin. Now, I don't hold any Algorand, but I try to be as objective in this video as possible. What you see over here is the Algorand price divided by the Ethereum price. So the relative performance of Algorand to Ethereum. And so this chart looks pretty different, right? Not as nice anymore compared to the US dollar chart, right? So Ethereum was performing pretty well. It was performing better than Bitcoin. A lot of applications happening on Ethereum right now. Yield farming, NFTs. There's also the hope that the upcoming update to ETH 2.0, the switch to proof of stake, will reduce the gas fees. So Ethereum was doing really well and was able to outperform Algorand. Now the question is, Algorand is obviously a riskier bet than Ethereum, right? Algorand has a market dominance of 0.5% roughly speaking. Ethereum has a market dominance of around 18%. So Ethereum is around 36 times larger in terms of market cap compared to Algorand. And so you could argue that Ethereum is less risky simply because of its size. But also when we look at the relative performance, it currently at least seems to have the momentum on its side. Now, if you've got fundamental conviction that Algorand will turn this around, that the momentum here will turn around, how much risk is involved in betting here against the market? You can draw, for example, these two trend lines over here, where we have recently broken out, but we could fall back at any time, right? We never know. These trend lines, they are just imaginary lines, they're not set in stone. But let's say the general momentum stays like this for another year or so. And it really takes time for the fundamentals to reflect in the price. If that's the case, how much potential loss could we see here? So one way to figure this out is just to look at the slope of this downtrend. So let's just measure 1 year of data here. There we go. That's a potential loss versus Ethereum of 65%. So those are the kinds of risks you are facing here. If it doesn't turn around immediately, but if it continues on this trajectory for another year, you might be paying quite a price. So your expected return over the very long term has to be very, very high. You really need to have a very strong fundamental thesis, because if you don't, betting that strongly against the general momentum can be pretty costly. Now you can also look at this in a more positive light. I'm trying to be balanced here, so let's look at potential supports and resistances. You could make the case theoretically that we are just recently in a sidewards trend and we are establishing something very similar to what we have seen in the Bitcoin chart. But if that's your thesis, you might want to wait a little bit until we hit those support lines again, right? So this is another drop of say 30%, or if you're very cautious, of 45%. If you believe in that we are basically now moving in tandem with Ethereum, and if you think that the general momentum here is about to shift. Now let's look at the relative performance to Solana. Solana had obviously quite a run, and that outperformance basically started here around the middle of February. Before that, we were moving in this sideways range. But since the middle of February, the outperformance of Solana was pretty massive, right? A 90% underperformance of Algorand. But recently, with this increased attention, with this heightened trading volume, we did have a bit of outperformance. We are looking at 65% gain versus Solana. But again, the overall trend here, it doesn't look too pretty. It looks pretty similar to the Ethereum chart. The pure price action, the pure chart should not be the reason why you get into Algorand. I think you really need to base your investment here completely on fundamentals. I personally like to ride the waves that are already established, the momentum that is already positive. I'm okay with joining the party relatively late. But of course, if you are right and the market in general is wrong, you can make very, very impressive gains, right? We have seen this previously in Cardano, for example. Here, this is the long-term chart of Cardano, and the market during the crypto winter was pretty wrong about Cardano, right? Temporarily, Cardano fell by 98%. After the Corona crash, you could have bought one ADA for around 2 cents. So this is a 100x from here, right? So if you get the fundamentals right and you make a bet against the market when everything looks bleak, then the potential gains, they are very, very massive. But that's obviously not easy, right? It's not easy to buy an asset when the chart looks like this. Buying an asset at this point is pretty scary. And that chart doesn't look too different to the relative valuation chart of Algorand versus Ethereum. My only comment here that I would make is be aware of the potential risk, right? 66% loss versus Ethereum per year. And with that, size your bet accordingly. So don't bet the whole farm, because if you believe in Algorand, then the outperformance is probably not going to be just like a 2 or 3 or 4x. The outperformance would be massive. And with that, you don't have to bet a lot of money, right? If you expect to see, say, a 20 or 30 or 50x on Algorand because the market is wrong and the fundamentals are right, then your bet doesn't have to be huge in order to still influence your overall portfolio return quite a lot. So the higher the risk, the more skewed the return profile, the smaller you can afford to make the bet. Now here, for completeness sake, we've got the Algorand versus Cardano chart. Those charts, they don't look very different. Here is the underperformance since inception, and here is the outperformance versus Cardano recently since the end of August. Cardano is struggling quite a bit after the smart contract launch. There seems to be quite a price ceiling right now. The trading volume for Cardano is pretty low, and so Algorand was able to outperform this pretty massively recently. Here's the chart of Algorand versus Cosmos Atom. And here, interestingly enough, we again see a sideways trading range somewhat. It looks very similar to the Bitcoin chart. This is Algorand versus Cosmos Atom. This is Algorand versus Bitcoin. Very similar chart patterns. Here, the risk versus reward looks a bit better. A potential loss of around 20%, a potential gain of around 110%. But yeah, none of those charts indicate that in the short term, Algorand is very, very cheap, right? It's either in the middle of the trading range or it's in a downtrend where we are currently bleeding after a recent top. A lot of those charts don't look very flattering in the very short term. So if you're just short term speculating and looking for an entry point, I'll probably wait for another 10-20% drop. If you're buying for the very long term and you believe in the potential massive upside because the market might be wrong, then maybe timing these 10-20% doesn't matter as much, right? Then you're buying now and maybe selling in a few years. So what you could do in that case is to simply dollar cost average and buy a little bit of Algorand every month. That way you get kind of agnostic to the short-term price movements, right? If it goes down, you're happy, you can buy more of the coin. If it goes up, you're also happy because you make money. So dollar cost averaging is really a nice way to kind of lengthen the time horizon and to stop focusing at the short-term noise. If you enjoyed this video, please give this a like. YouTube will then help to grow the channel. If you haven't yet, feel free to subscribe as well. I publish videos regularly. Last but not least, we've got a Telegram channel. We are almost 800 people now. It's the Bitcoin Strategy channel. You can find us either by clicking the link in the video description or by searching for Bitcoin Strategy channel within the Telegram app. See you next time. Bye-bye.